The meeting will come to order. I note that a quorum is present and each member has before them copies of the material on our agenda today and at their place at the rostrum. And I'd like to remind our members that while the majority of the provisions of these bills before us fall under Rule 10 jurisdiction of the Committee on Agriculture, other provisions are outside the scope of the Agriculture Committee's jurisdiction. Therefore, under House rules, we will not be considering the provisions outside the committee's jurisdiction during the markup. The committee does not have jurisdiction to vote on whether to approve, disapprove, or amend provisions not within its jurisdiction, and no such vote will occur during the markup. In conclusion, members will not be voting on the entire bill. Instead, the vote will be on whether to report it to the House with recommendations on how the provisions in each bill that are in the committee's jurisdiction should be amended as developed during the markup. I ask unanimous consent that the Subcommittee on General Farm Commodities and Risk Management be discharged from further consideration of the bill H.R. 1840. And without objection, seeing no objection, so ordered. The bill H.R. 1840 is now before the committee for jurisdiction, and without objection, first reading of the bill will be waived and it will be open for amendment at any point. And I'd like to thank everyone for being here today for this business meeting. In a way, we began preparing for today's markup nearly a year ago. That's when we held our first hearing on the implementation of Title VII of Dodd-Frank, the Wall Street Reform and Consumer Protection Act. We held a total of 7 hearings in the past year, gathering testimony from nearly 40 witnesses. The feedback we heard was fairly consistent across the country. Farmers, ranchers, community bankers, and Main Street businesses are worried about the unintended consequences of Dodd-Frank rules. We've heard from utility companies that might not be able to hedge against volatile energy prices because they could be caught up in the definition of swap dealers. We've heard from community banks that may have to stop providing interest rate swaps to their customers so as to avoid strict regulations. We've heard from manufacturers who will have to alter their business models because they could be forced to post margin on internal transactions. It boils down to this. Some of the regulations could make using derivatives so expensive that businesses will be forced to stop using them to hedge against risk. That increased costs for consumers reduces stability in the marketplace. This is completely contrary to the intent of the original Dodd-Frank legislation. Today, we have a chance to fix that. The bills before us have bipartisan support. They contain common sense tweaks to the legislation to ensure that it is implemented and it doesn't unnecessarily burden our job creators. Not one of these 6 bills contains dramatic changes to Dodd-Frank. They are balanced proposals that ensure that legislation is implemented in the manner Congress intended. They are intended to restore the balance that I believe can exist between sound regulation and a healthy economy. The bills before us represent sound policy and a logical improvement to the current legislation. I look forward to advancing them in the bipartisan fashion. And with that, I turn to the ranking member for any comments he might have.
Thank you, Mr. Chairman. For the past year, our committee has held several hearings and listened to a host of stakeholders who are concerned about how the Dodd-Frank Act is being implemented with regard to improving oversight and accountability in the derivatives market. At each of these hearings, I have recommended patience and caution for those seeking to change the law. Today, as the committee marks up these various bills, I want to reiterate my view that it is premature to move on legislation until we see the final rules. Looking at the Dodd-Frank rules that have already been finalized by the CFTC, I believe it is safe to say that so far the CFTC has done a pretty good job. For example, during a legislative hearing last year, we heard concerns about business conduct standards and potential impact that they could have on pension plans' ability to use swaps to hedge risk. Earlier this month, the Commission approved a bipartisan final rule establishing business conduct standards. The general feeling I get from the pension plans is that the CFTC got the final rule right. I talk frequently with Chairman Gensler, and from what he has told me, I'm confident that much of what we are considering today is not necessary. The CFTC, in my opinion, is going to get this right. To date, most of the final rules coming out of the Commission have bipartisan support and are addressing the concerns that stakeholders have expressed to both us and the Commission. I know the CFTC's steady progress is driving the Republican congressional leadership crazy. It's hard to peddle fear of agency overreach when the agency actually acts responsibly and truly listens to people when putting together a final product. It's a shame that we are focusing so much attention on problems that may happen instead of problems that have happened, like thousands of customers still waiting for their money from MF Global. Unfortunately, in this town, people are often more interested in scoring political points than actually trying to solve real and present problems. I understand and support the chairman in bringing 3 of the bills we are considering before the committee today, even if I may not support them on their merits. The House Financial Services Committee has already acted on them, and the chairman leadership has only given the committee until February 1st to act or else be discharged. So although I think it is premature to consider these 3 bills based on their content, the members of this committee should have the right to lend their voices pro or con before the Republican leadership takes them away from us. 2 of these bills have not been acted on by other committees, and I believe we could wait to see the CFTC's final rules. The fact that the CFTC may consider the swap dealer definition in the coming weeks could give us great insight as to whether provisions in both bills are necessary. But as I well know, being chairman has its privileges, and one of them is setting the committee's agenda, so here we are. The sad part of this exercise is that we may find out later that it wasn't even necessary. What is potentially even sadder is that even if we do find that any of these bills are necessary, they have no future. The majority of Senate Republicans and their leadership have dedicated themselves to repeal of Dodd-Frank. So even if the CFTC gets something wrong and we try to fix it, the Senate Republicans look like they'll filibuster any correction until they get some kind of poison pill amendment that guts the heart of the law. They're not interested in making this law better. It appears to me they just want to kill it. So I want to thank the chairman and his staff for working with us on these bills. I think we've worked out most of the concerns so that we'll be able to move forward, but we'll see who's right when the dust settles after all these rules get written. So I appreciate the chairman working with us and yield back my time.
Chair, the ranking member yields back his time. The chair would recognize the subcommittee chairman, Mr. Conaway, for any opening statement.
Thank you, Mr. Chairman. I'll ask unanimous consent that my full statement be included in the record, and I'll just make some quick comments. I want to thank Leonard Boswell and Mike Quigley for co-sponsoring this bipartisan piece of legislation. This actually deals with the Commodities Exchange Act, not Dodd-Frank. It will require the CFTC to do a qualitative and quantitative analysis of cost benefits when they promulgate rules. This is a prospective change to that requirement, so it would not affect any of the rules or regulations that are being currently considered by the CFTC. And this lines up with what the President's letter to the executive branch agencies were earlier last year, and helps line that up. So it's a change to the Commodities Futures Commission's requirements that they consider both qualitative and quantitative cost benefits, and that they only adopt rules where the benefits are clearly outweigh the costs of those rules. And again, it's a prospective change. Doesn't affect any of the Dodd-Frank work that's going on right now. So with that, I yield back.
The gentleman yields back his time. The chair would recognize the ranking member from Iowa of the subcommittee, Mr. Boswell.
Well, thank you, Mr. Chairman, and I too want to thank you, Mr. Conaway, and this committee for the bipartisan effort that was accomplished through H.R. 1840 to ensure that the CFTC implements rules and regulations in a cost-effective manner. I believe it is critical that while we work to increase market fairness, that we ensure our dollars are being spent wisely. H.R. 1840 will help maintain efficiency, competition, and the integrity of the futures and swap market by requiring that the CFTC make a comprehensive analysis to assess the costs and benefits of rules and regulations before implementation. As you know, and I might ad-lib a little here, although amnesia seems to have set in on how we got where we are, but we are where we are. We face important and difficult decisions regarding our nation's budget. This bill takes the right step in protecting American investments and market integrity, and I thank the committee for considering this bill today. However, we also have responsibility to assess our nation's needs and priorities. I am committed to doing all that I can to invest wisely in market oversight and fund the CFTC to our best ability to ensure market integrity for American end users. To highlight this need, Mr. Welch and I have offered an amendment to H.R. 1840 This amendment would add to H.R. 1840 the Wall Street Accountability Through Sustainable Funding Act, legislation introduced by Representative Welch, DeLauro, and myself that would require the CFT to offset annual appropriations by implementing a small fee for market transactions. This fee, similar to the SEC cost recovery fee, would support the CFT's ability to invest in staff and infrastructure and acquire the tools necessary to monitor one of America's most expansive markets. From 2001 to 2010, the notional value of derivatives held by U.S. commercial banks increased by 400%. And this same industry invests approximately $25 billion in technology each year. To successfully provide oversight for this market, we must provide CFTC with the funds to invest in technology and expand personnel. Our agriculture end users depend on a strong regulatory force to weed out market players who are manipulating prices and threatening their operations, and inadequate funding for the CFTC creates vulnerability to market gamblers. While I do withdraw my amendment, I am hopeful that my colleagues and I can work over the coming year to address this issue and work together to provide the CFTC with the appropriate tools to get the job done. I thank you, Mr. Chairman, and I encourage my colleagues to support H.R. 1840.
And the chair thanks the ranking member of the subcommittee for his thoughtful amendment and his comments there. Do any other members have comments on the underlying bill? Seeing none, would counsel, I'd like to recognize counsel for a brief explanation of H.R. 1840.
Thank you, Mr. Chairman. Section 1 amends the Commodity Exchange Act to require the CFTC, through the Office of the Chief Economist, to assess the costs and benefits of a regulation or order before it's promulgated. In performing the assessment, the Chief Economist shall consider protection of the market participants and the public, the efficiency, competitiveness, and financial integrity of futures and swap markets, the impact on the futures and swap markets' liquidity, price discovery, risk management practices, available alternatives to direct regulation, the degree and nature of the risks posed by various activities within the scope of the Commission's jurisdiction, whether the regulation or rule is tailored to impose the least burden on society, whether it's inconsistent or duplicative of other federal regulations, whether the approach taken maximizes net benefits, and other public interest considerations. Thank you, Mr. Chairman.
Thank you, counsel. Are there any amendments? Seeing no amendments, are there any comments? Seeing none, the question is on the motion to report favorably.
Mr. Chairman, I move the bill H.R. 1840 be reported favorably. Oh, we have to adopt it.
Are there
Where's the-
Sometimes the Agriculture Committee runs so smoothly, even amazes us at the front of the room. The question is on the motion to favorably report H.R. 1840. All in favor signify by saying aye. Aye. All opposed signify by saying no. The ayes have it, and the bill H.R. 1840 is ordered reported favorably to the House. I'd like to commend our colleague from Missouri for all of her hard work on behalf of small banks and businesses. H.R. 3336 will ensure a reliable flow of credit to farmers and businesses that we rely on to fuel our economic recovery. Community and farm credit banks do not play a role in financial crisis, so it's important that we ensure they have the ability to continue serving their customers' responsibility. We also need to preserve their ability to hedge their own risk without unnecessary and costly regulation. I strongly urge support of the bill, and I'd like to thank the ranking member for working with us to make this bill bipartisan. I recognize the ranking member for any comments you might have.
Thank you, Mr. Chairman. I just want to briefly say that I support this bill with the manager's amendment, and I believe that on issues the bill tries to address, the CFTC will end up with a very similar result. In particular, I've talked to Chairman Gensler many times about the concerns of the Farm Credit System and their desire for fair treatment by the Commission. As you may recall, at one of our previous hearings, Chairman Gensler raised the possibility that this bill may be necessary because he couldn't assure us that the farm credit institutions could partake of the same exemption we provided insured depository institutions. But now it seems that they've found a way to address Farm Credit's concern and comply with the intent of Congress. I also want to thank Chairman Lucas for accepting our change to the clearing exemption. When you look at the swap activity of some banks with $30 billion in assets, I question whether a fixed asset test with that high was appropriate, and I believe that the risk-based tests that we put in this bill is adequate. So I support the bill and look forward to its adoption.
Thank you. I ask for unanimous consent that the Subcommittee on General Farm Commodities and Risk Management be discharged from further consideration of the bill H.R. 3336 without objection. Seeing no objection, so ordered. The bill H.R. 3336 is now before the committee for consideration, and without objection, a first reading of the bill will be waived, and it will be open to amendment at any time. The chair would now recognize the Congresswoman from Ms. Hartzler.
Thank you, Mr. Chairman. I certainly appreciate your support, and Ranking Member Peterson. It means a lot to be able to make sure that the farmers and small businesses in our communities have access to credit. And that's what this bill does. It does two basic things. It ensures that our farm service agencies, our farm credit agencies, our small banks, and our credit unions are able to hedge their risk, their interest rate risk, without being considered swap dealers.
Apparently I haven't.
And it also ensures that they don't have to go through a clearinghouse in order to participate in these things, as well as rural electric cooperatives will not be having to come under those onerous regulations. So the bottom line is we want to make sure that our farmers and our small businesses in our communities are able to use the financial institutions in their local communities without having to go to the big banks in order to do their business. And so by clarifying this through this legislation, we will ensure that our small businesses will have the credit available, and I appreciate everyone's support. Thank you.
The gentlelady yields back her time. The chair would recognize Mr. Schilling for a colloquy.
Yes, I move to strike the last word, Mr. Chairman. Thank you very much for the opportunity to enter into.
Recognized.
Thank you. I'd like to enter into a colloquy with the chair.
I'd be happy to enter into a colloquy with the gentleman from Illinois.
Thank you, Mr. Chairman. Very briefly, I just want to raise a point here with the hopes that we can address an issue relating to captive finance companies. Many American manufacturers have captive finance divisions, which have the primary purpose of providing loans and leases to customers to purchase the goods they make. John Deere in Moline, Illinois, has a captive finance company that provides tens of millions of dollars in liquidity into rural America every day. This financing is essential to ag producers and construction contractors. Their CFO, Jim Field, testified before this very committee and expressed the need for clarification of the application of this captive finance provision. Congress explicitly provided exemptions in Dodd-Frank to ensure the captive finance companies are not considered major swap participants, nor may they be subject to the mandatory clearing requirements. This exemption, referred to as the 90-90 rule, while Congress' intent is clear, the application of the exemption is dependent upon further guidance from the CFTC with regard to how companies should calculate and demonstrate their eligibility. However, the CFTC has not provided any further guidance and has indicated that they do not intend to provide any further clarification to the rule. In the absence of additional clarification from Congress, the very companies the exemption was designed for may be ineligible. Captives are a good source of financing for consumers, but if the 90-90 rule is not further clarified by the rule or legislation, we believe the captives could be weakened with the unintended result of more regulation on manufacturers who use derivatives to hedge commercial risk and more limited borrowing options for consumers. This is a bipartisan issue. I believe Congressman McIntyre and Congressman Owens may speak to this issue as well. Chairman Lucas and Ranking Member Peterson, can we work together on to address this clarification of the issue for captive finance companies?
Mr. Schilling, I appreciate your raising this issue, and I thank you for your leadership on issues important to our manufacturing sector. I agree that these captive finance companies serve as an important source of financing, particularly in rural America, and I believe the 90/90 rule needs to be further clarified, and I look forward to working with you on this in the days ahead. Thank you.
And Chairman, I appreciate the member, Ms. Schilling's expressing the concerns that we have both heard from captive finance entities associated with Ford and John Deere. As this bill moves on, I'm willing to work with members to examine the concerns being raised, see what steps can be taken to address them.
Gentleman yields back this time.
Yield back. Thank you, sir.
Do any other members have remarks on the underlying bill?
Mr. Chairman.
The gentleman from Texas is recognized.
Thank you, Mr. Chairman. And first of all, I want to associate myself with the remarks of Mr. Schilling and the Chairman that this is an important issue, and I hope that we will continue to make sure we get this right. It's very important to agricultural credit. The other thing I would like to do is ask unanimous consent to enter into the record a letter from the Independent Community Bankers dated January the 24th, 2012, addressed to the Chairman and the Ranking Member.
Seeing no objection, so ordered.
Yeah, and basically, there's another issue that I hope that we can also work on. It's along the lines of making sure that our community banks are able to access and use derivatives for important hedging opportunities, and it's the issue of being able to segregate or rehypothecate, the funds for margin. In many cases, these smaller entities, smaller banks, use intermediaries to put interest rate hedges on. And in some cases, that money is deposited, the margin for that is deposited with intermediary, but in many cases, the transaction goes upstream. And so at some point in time, if we're not able to let the customer that originated that transaction move those funds upstream, then in many cases, you have a duplication of margin. So I would hope that as we could look down the road of some ways here, maybe clarify that the customer can choose where they want their money, whether it's with the middleman or if, ultimately if it goes upstream, that those funds could be moved at the discretion of the person originating that transaction.
Gentleman makes a very good point, yes.
And with that, I would yield back the balance of my
The
time.
gentleman yields back the balance of his time. I'm seeing no other.
Mr. Chairman, I'd like to make a...
The gentleman is recognized from New York. Mr.
Thank you. I'd like to associate my remarks with Mr. Schilling. I think that as we look for opportunities to manage risk, this is not one of the areas that actually increases the level of risk that the system is bearing when you have a captive a captive finance company. So I'm very much supportive of our moving forward to make sure that we have clarification in this area. I think it's extremely important. And again, I would focus on the fact that you are not enhancing systemic risk or individual participant risk by following this path. I would conclude by asking that my full remarks be appended to the record.
So ordered.
I yield back. Thank you.
Gentleman yields back. Seeing no other requests for recognition, I now place an amendment in the nature of a substitute for H.R. 3336, which is in each member's packet. Without objection, it will be considered as original text for purposes of amendment, and I now recognize the council for a brief explanation of the substitute amendment.
Thank you, Mr. Chairman. Section 1 is the short title of the bill. Section 2 amends the Commodity Exchange Act to clarify that insured depository institutions and farm credit institutions shall not be swap dealers to the extent the institution enters into swaps with customers seeking to manage risk in connection with an extension of credit by the institution. Section 3 amends the Commodity Exchange Act to exclude from the definition of financial entity small banks, savings associations, farm credit system institutions, nonprofit cooperative lenders controlled by electric cooperatives under specific circumstances. Section 4 is the effective date of the amendments of the bill. Thank you, Mr. Chairman.
The chair thanks the council. The bill now in the nature of a substitute is open for amendment. The chair would recognize the ranking member for an amendment.
Mr. Chairman, I have an amendment that I'm going to offer to all of the remaining bills. And this goes to my concern that what we're doing here doesn't stop what's going on at the FTC. Because you could have a situation if something passes where the rule would get stopped and they'd have to start all over again. You know, we're a year and a half away since the enactment, and we still haven't got a lot of these things adopted. So none of these bills make dramatic changes, and it's pretty very straightforward and easy to implement. So for those of you that have been around, the language should look very familiar. It's the exact same provisions that we incorporate in each farm bill for implementation of Title I. In that context, it exempts USDA from the provisions of the Paperwork Reduction Act and notice and comment on the APA. So this just allows the CFTC to move ahead, and nothing that we're doing here will have them go back and start all over again. So I would urge adoption of the amendment.
Gentleman yields back. The chair would note for the record that copies of the amendment have been distributed to every member. Does anyone seek recognition on this amendment? The chair would recognize himself for 5 minutes. Just to briefly note that the ranking member is exactly right. While this would not impede the ability of this legislation move forward or for the Commodity Futures Trading Commission to take note of its ultimate passage across the House floor, it would, as the ranking member alluded to, not slow down the process. They would not be required to have additional input or comment period on any final passed bill. With that, I yield back my time. Seeing any other requests for recognition? Seeing none, the question is on the amendment by the gentleman from Minnesota. All in favor signify by saying aye.
Aye.
All those opposed, nay. The ayes appear to have it. The ayes do indeed have it. The amendment is adopted. Are there any other amendments for consideration? Seeing none, ranking member.
Chairman, I move that the amendment in the nature of substitute to H.R. 3336 be approved.
The question is on the amendment in the nature of a substitute as amended to H.R. 3336. All in favor signify by saying aye.
Aye.
All opposed? The ayes appear to have it. The ayes do indeed have it. And the amendment in the nature of a substitute as amended to H.R. 3336 is adopted.
Chairman, I move that the bill H.R. 3336 as amended be reported favorably to the House with recommendation that it do pass.
Is there any discussion on this motion? Seeing none, the question is on the motion to favorably report H.R. 3336 as amended. All in favor signify by saying aye.
Aye.
All opposed? The ayes appear to have it. The ayes do indeed have it. The bill as amended is ordered reported favorably to the House. Chair recognizes himself. I ask unanimous consent that the subcommittee on general farm commodities and risk management be discharged from further consideration of H.R. 2682 without objection. Seeing no objection, so ordered. The bill H.R. 2682 is now before the committee for consideration, and without objection, a first reading of the bill will be waived, and it will be open for amendment at any point. The chair now recognizes himself for 5 minutes. There have been few issues within Dodd-Frank Act that have garnered as much widespread bipartisan support as the end-user exemption. Immediately following the passage of Dodd-Frank, Senators Dodd and Lincoln wrote to Representative Barney Frank and our ranking member Colin Peterson to reaffirm the congressional intent that end-user transactions were to be exempt from margin requirements. While the CFTC has proposed to uphold congressional intent, supposedly they do, the banking regulators have ignored it and proposed to require margin in the form of cash or highly liquid securities from non-financial end users. The jurisdiction the prudential regulators have provided for ignoring congressional intent, so they are required to do so by Title VII. This bill simply reaffirms congressional intent by providing an explicit and clear margin exemption for non-financial end users. It is critical that we ensure businesses across the country are not required to divert precious working capital away from growth and job creation. I strongly support this amendment, and I urge my colleagues to do the same, and I now recognize the ranking member if he would have comments.
Thank you, Mr. Chairman. And as the chairman said, this is not a problem that has been caused by us or by the CFTC. It is a problem being caused by the prudential regulators. This is authority they had before Dodd-Frank. They never really used it, but because of the collapse, I guess now they're proposing to use it. And I'm not sure anything we're doing here is going to change what they're up to. I'm not sure how we fix this, but I guess the bill can't do any harm. So I'm not sure this solves the problem, but I just want to reiterate, we're not the problem. We didn't cause this problem. The CFTC, I've talked to Chairman Gensler, they're following our intent. So this is an issue that's being caused some other place, and hopefully they'll listen, but I'm not very optimistic. Yield back.
Gentleman yields back. Do any other members have remarks on the underlying bill? I now place an amendment in the nature of a substitute for H.R. 2682, which is in each member's packet. Without objection, it will be considered as original text for purposes of amendment. I now recognize the General Counsel of the Council for a brief explanation of the substitute amendment.
Thank you, Mr. Chairman. Section 1 is the short title of the bill. Section 2 amends the Commodity Exchange Act to clarify margin requirements shall not apply to a swap in which one of the counterparties to the swap is not a financial entity and qualifies for the end-user clearing exemption. Section 2B is a similar amendment to the Securities and Exchange Act. Thank you, Mr. Chairman.
Thank you, Counsel. Does the ranking member have an amendment?
Mr. Chairman, I offer the same amendment that I offered to the previous bill to make sure that nothing in this stops the rulemaking process.
Would the clerk distribute the amendment, please? The gentleman may proceed.
So I move the amendment.
Since the amendment is essentially the same as was previously distributed, I'll distribute the amendment. Is there any discussion on the amendment? Seeing none, the question is on the amendment from the gentleman from Missouri, the gentleman from Minnesota, the ranking member. All in favor signify by saying aye.
Aye.
All opposed? The ayes appear to have it. The ayes do indeed have it. The ranking member is recognized.
Mr. Chairman, I move that the amendment in the nature of substitute to 2682 be approved.
The question is on the amendment in the nature of a substitute as amended to H.R. 2682. All in favor signify by saying aye. Aye. All opposed, saying no. The ayes appear to have it. The ayes do indeed have it. And the amendment in the nature of a substitute to H.R. 2682 is adopted. The ranking member is recognized.
Chairman, I move that the bill H.R. 2682 as amended be reported favorably to the House with recommendation that it do pass.
The question is on the motion to favorably report H.R. 2682 as amended. All in favor signify by saying aye. All opposed by signifying no. The ayes appear to have it. The ayes do indeed have it. The bill as amended is ordered reported favorably to the House. I would ask unanimous consent that the Subcommittee on General Farm Commodities and Risk Management be discharged from further consideration of the bill H.R. 2779 without objection. Seeing no objection, so ordered. The bill H.R. 2779 is now before the committee for consideration, and without objection, a first reading of the bill will be waived and will be open for amendment at any point. And I would recognize myself for an opening comment. I'd like to thank Congresswoman Fudge for bringing us this bipartisan legislation, which was passed by the Financial Services Committee by a vote of 53-0. H.R. 2779 ensures that businesses are able to maintain successful business models that centralize risk management expertise in a single or limited number of affiliates. Regulating inter-affiliate swaps would not provide additional risk reduction, but it would significantly raise costs for most businesses. This legislation will provide for an exemption for inter-affiliate swaps from certain regulatory requirements while still ensuring that they report to swap data repositories. I strongly support this bill and recognize the ranking member for any comments he might have.
Mr. Chairman, I just want to briefly say that I support this bill with the manager's amendment. As I said earlier, I had grave concerns about the loopholes created. I know that wasn't the author's intent. So the limitations imposed by this amendment adopted in financial services, I think, have struck the right balance. So in my view, the swaps should be treated as all other swaps when it comes to public reporting, and the changes we included in the manager's amendment should help make that possible. Yield back.
Does the gentlelady seek recognition?
Mr. Chairman.
Chair recognizes Congresswoman Fudge for 5 minutes.
Thank you, Mr. Chairman, and Mr. Peterson. I do welcome this opportunity to discuss the bill that I've introduced with Representative Steve Stivers of Ohio, H.R. 2779. Our bill will exempt inter-affiliate swaps from certain margin and reporting requirements created under Dodd-Frank. Inter-affiliate swaps are executed between entities within a single corporation to allow risk within the group. They allow for centralized hedging, whereby a corporation uses inter-affiliate swaps to combine its positions, executing most or all of its market-facing swaps through a single affiliate. New regulations are meant to apply only to transactions that might increase systemic risk, not on inter-affiliate trading. H.R. 2779 is necessary to exempt these inter-affiliate swaps because they do not pose or increase systemic risk. I'm committed to working to ensure an efficient and transparent derivatives market. The legislation I have introduced with Representative Stivers would not lead to abuse because Section 721C of Dodd-Frank gives regulators explicit anti-evasion authority. Moreover, the bill preserves regulatory authority under Sections 23A and 23B of the Federal Reserve Act, and as well as authority to protect federal and state insurance and guarantee funds. It is important that we work together to fight fraud and manipulation, but we must do so in a way that minimizes risk of damage to the American economy. H.R. 2779 is a bipartisan effort to balance the needs of the business community while continuing to protect financial consumers and investors from the worst abuses in the financial system. I urge my colleagues to support the bill, and I yield back.
I thank the gentlelady for her efforts and acknowledge your yielding back. Any other members have remarks on the underlying bill? Seeing none, I now place an amendment in the nature of a substitute for H.R. 2779, which is in each member's packet. Without objection, it will be considered as original text for purposes of amendment. I now recognize the council for a brief explanation of the substitute amendment.
Thank you, Mr. Chairman. Section 1A amends the Commodity Exchange Act to exclude from the definition of the term swap transactions involving a party that is controlling, controlled by, or under common control with its counterparty. These transactions must be reported to a swap data repository or to the CFTC. Section 1B contains a similar amendment to the Securities and Exchange Act. Thank you, Mr. Chairman.
I thank the council. The amendment in the form of substitute is now open for amendment. Chair recognizes the ranking member for an amendment.
Chairman, I would offer the same amendment offered to the other previous two bills.
Chair thanks the gentleman. Seeing any discussion? The question is on the amendment from the ranking member from Minnesota. All in favor signify by saying aye. The clerks will distribute. Aye. All opposed? The ayes appear to have it. These are exactly the same amendments, right?
Yeah, it's
the
same amendment. It's going to be offered to every bill, so I'm not sure if we have to hand them out, Maybe legally we do.
Chair will save the paper then. Any additional amendments?
Save a tree.
Any other discussion on the underlying bill? I recognize the ranking member.
Chairman, I move that the amendment in the nature of substitute to H.R. 2779 be approved.
The question is on the amendment in the nature of a substitute as amended to H.R. 2779. All in favor signify by saying aye. All opposed? The ayes appear to have it. The ayes do indeed have it. The amendment in the nature of a substitute to H.R. 2779 is adopted. Mr. Ranking Member.
Mr. Chairman, I move that the bill, H.R. 2779, as amendment, be reported favorably to the House with the recommendation that it do pass.
The question is on the motion to favorably report H.R. 2779 as amended. All in favor signify by saying aye. All opposed by signifying no. The ayes appear to have it. The ayes do indeed have it. And the bill as amended is ordered reported favorably to the House of Representatives. The chair would take this point to note to my colleagues that the first series of votes have begun. We've had a conversation with the floor management on the majority side. I would encourage us to say another 10 minutes and press on if that's possible. Everyone, of course, is subject to their own conscience, their own time constraints. And with that, we'll proceed. The bill H.R. 3527 is now before committee for consideration and without objection. The first reading of the bill will be waived and it will be open to amendment at any point.
Do all this.
I'd like to thank and recognize myself for 5 minutes. I'd like to thank Mr. Hawken for his leadership on this bill and to the ranking member for working with us on an amendment in the nature of a substitute. As we've all heard from numerous witnesses in the committee room, the definition of swap dealer is overly broad, could be subject many end users to comprehensive regulation intended for large financial institutions. Aren't you impressed that an Okie can talk this fast? In addition, a broad swap dealer definition would have a disproportionate impact on agriculture and energy end users, the very entities whose responsibility and risk management practices could help reduce the cost of food at power for consumers. With that, I will request unanimous consent to add the rest of my opening statement on this bill to the record. Seeing no objection, so ordered. Now turn to the ranking member.
No statement.
Hooray.
Or wait a minute, am I supposed to do the colloquy? Okay. All right, I have concerns about the opening up loopholes here, and we've talked about this. I'll try to boil this down. But you and I may understand what we mean by this phrase, but the language in this bill, I think, is sufficiently broad and vague that I fear misinterpretation that could create legal loopholes where dealing activity can squeeze into trading objective activity. I know it's not your intent to create loopholes, and I would just ask for your commitment that as this bill moves forward, we try to continue working on this language to determine if we can better express what we are trying to accomplish. If I've boiled it down too much.
I appreciate the ranking member's concerns. I agree we can work together to improve this bill. I think we both want to ensure legitimate end users are not unnecessarily burdened by the regulations without creating loopholes. I thank the gentleman for that colloquy, and I recognize Mr. Hultgren for 5 minutes.
I will be very brief. First of all, I just want to thank the chairman and ranking member. Also want to thank Mr. Bourne for his help on this, and really do appreciate the help of the End User Coalition and rural co-ops for their work, again, of protecting the end user on this. With that, I yield back.
Gentleman yields back. Do any other members have remarks on the underlying bill?
Mr. Chairman,
The gentleman from California is recognized for 5 minutes. Mr.
I have an amendment at the desk.
The gentleman has an amendment at the desk. Would the clerk distribute that? And as it's being distributed, would the gentleman proceed?
Yes, Mr. Chairman and ranking members, members of the committee, I intend to withdraw my amendment, but I'd like to speak briefly as to the text. The Commodity Future Trading Commission, the CFTC as we know it, is obviously has a important responsibility, but as we look at this definition of swap dealer, I think that there are some instances, as it relates to at least California law, where the bill falls short in the clarification needed. Let me be specific, and because time is of the essence, I'll be brief. My amendment will clarify that actions undertaken to comply with state or local laws or regulations are specifically excluded in determining whether an entity is in fact a swap dealer. The California utility companies are concerned because, again, of California law, that this amendment would, the amendment that I'm offering would provide clarification as to the resource adequacy of contracts to satisfy California's Public Utilities Commission procurement requirements, 2, renewable energy credits used to satisfy the renewable portfolio standard, and 3, emission allowance to satisfy California's law as it relates to greenhouse gas should not be considered in determining whether an entity is a swap dealer. Mr. Chairman and the ranking member, members of the committee, I intend to withdraw the amendment, but I hope that you and the ranking member will continue to work with us to ensure that, and interested members, that the committee, that on these issues, before the bill goes to the floor, that California utility companies and California ratepayers are not punished as a result of the definition of what's included as a swap dealer.
I thank the gentleman from California for withdrawing his amendment. I will be very pleased to work with him as we try to address this issue. The gentleman yields back. The gentleman from California, Mr. Baca, is recognized.
Thank you very much, Mr. Chairman. I support my good friend Jim Costa for introducing this amendment and thank him for his work on this issue. Public utilities in my district have expressed serious concern that the transaction they undertake comply with California state laws will be captured by CFTC definition of swaps. There are compliance transactions that are mandated by the state of California. I believe the utilities have legitimate concerns that if these transactions are classified as swaps, may result in higher consumer costs to individuals in California. Again, I thank Representative Costa for introducing this amendment, and I hope the committee can have further discussions on issues in moving this forward. I yield back the balance of my time.
Gentleman yields back the balance of his time. Is there any other discussion? Seeing no other discussion, are the other amendments?
Mr. Chairman, I have one I want to withdraw quickly. Associate myself with you. Thank you, Mr. Chairman. I associate myself with you and the ranking member. Mr. Holcomb, thank you for a very well thought out bill that does exactly what it's supposed to do in protecting those end users. My only concern, again, was this loophole issue on financial institutions. I got the commitment from all of you that that'll be fixed, so I withdraw this amendment. Thanks, Mr. Chairman.
Gentleman thanks the gentleman. The gentleman now recognizes the ranking member for his amendment.
Mr. Chairman, I offer the same amendment.
The gentleman offers the same amendment. I appreciate the gentleman for offering the amendment. I support this standardized amendment and ask the clerk to dispense with distributing the amendment. Without objection, ask the amendment be accepted by unanimous consent. Seeing no objection, so ordered. The question is on the...
Mr. Chairman, I move the amendment in the nature of substitute to H.R. 3527 be approved.
The question is on the amendment in the nature of a substitute as amended to H.R. 3527. All in favor signify by saying aye.
Aye.
All opposed, same sign. Ayes appear to have it. The ayes do indeed have it. The amendment in the nature of a substitute to H.R. 3527 is adopted.
Chairman, I move that the bill H.R. 3527 as amended be reported favorably to the House with the recommendation that it do pass.
The question is on the motion to favorably report H.R. 3527 as amended. All in favor signify by saying aye.
Aye.
All opposed signify by saying no. The ayes appear to have it. The ayes do indeed have it. That the bill as amended is ordered reported favorably to the House. I ask unanimous consent that the Subcommittee on General Farm Commodities and Risk Management be discharged for further consideration of the bill H.R. 2586. Without objection, so ordered. The bill H.R. 2586 is now before the committee for consideration. Without objection, the first reading of the bill will be waived. It will be open to an amendment at any point. And at that point, the chair recognizes himself to acknowledge that this is a wonderful bill and it needs to be passed. And I turn to the ranking member for any comments that he might have. The ranking member has no comments. Does any member have remarks on the underlying bill? Seeing no underlying bill, comments that is. I now place an amendment in the nature of a substitute to H.R. 2586, which is in each member's packet. Without objection, it will be considered in original text for purposes of amendment. I now recognize counsel for a very thorough and brief explanation of the substitute amendment. Counsel?
Thank you, Mr. Chairman. Section 1 is the short title. Section 2 amends the Commodity Exchange Act to restrict the Commodity Futures Trading Commission from defining a swap execution facility in very specific manners. Thank you, Mr. Chair.
The amendment's now open for amendment. I recognize the ranking member for his standard amendment.
No, well, okay, I'll offer my standard amendment.
Although I recognize
I've got another
the ranking member
amendment.
as he chooses to use his time. Ranking member.
I'll offer the standard amendment first. We'll get that out of the way.
The clerk will dispense with distributing the standard amendment.
Together? Oh, excuse me. I've got an amendment that's got them together, so.
Thank you.
We've been, I've had some concerns about this, and we've been working to try to work them out, and we were able to accomplish that last night. So this amendment implements that. My concern was, well, first of all, I'm not sure this is necessary, but I understand that people want to send a signal to the CFTC, and so this amendment, I want to send my own signal that we should not gut the CFTC on many of the powers in terms of price transparency in the swap market. So this amendment, in addition to including my expedited implementation language, preserves some of the authorities the underlying bill would strip from the CFTC, authorities I believe are important to promoting greater transparency. I ask unanimous consent to enter 3 letters into the record one from the Swap Derivative Market Association, two from the Industrial Energy Consumers. Supporting this, I urge my colleagues to review them because they concern merits of our attention. The concerns merit our attention. We want these SEFs to be open, transparent marketplaces where competition governs, and I offer my amendment in an effort to take us a step closer in that direction. Urge my colleagues to support it.
The gentleman thanks the ranking member for his amendment and notes that if there's no objection, additional information will be added to the record. I would recognize myself for the time I might consume. I'd like to thank the ranking member for working with us on this amendment. This amendment makes targeted changes to the bill that will still provide the flexibility necessary for SEFs to evolve naturally without unnecessarily hindering liquidity or choice for market participants. I support the ranking member's amendment. Is there any other discussion on the amendment? Seeing none, the question is now on the amendment from the gentleman from Minnesota. All in favor signify by saying aye. Aye. All opposed? The ayes appear to have it. The ayes do indeed have it. The ranking member.
Mr. Chairman, I move that the amendment in the nature of substitute to H.R. 2586 be approved.
Is there any discussion on this motion? Seeing none, the question is on the amendment in the nature of a substitute to H.R. 20 as amended H.R. 2586. All in favor signify by saying aye.
Aye.
All opposed signify by saying no. The ayes appear to have it. The ayes do indeed have it, and the amendment in the nature of a substitute as amended H.R. 2586 is adopted. Ranking member.
Mr. Chairman, I move that the bill H.R. 2586 as amended be reported favorably to the House with the recommendation that it pass.
The question is on the motion to favorably report H.R. 2586 as amended. All in favor signify by saying aye.
Aye.
All opposed signify by saying no. The ayes appear to have it. The ayes do indeed have it. The bill as amended is reported favorably to the House. Does any member give notice of intent to file supplemental, minority, or additional views to any of the bills considered today?
Yes, I have I have additional views.
Additional views are noted. Without objection, the usual instructions are given to staff that consist of making such technical, clarifying, and conforming changes that are appropriate without changing the substance of the bill. The meeting is now adjourned.